Hi guys, Phil McGilvray here, founder of Grandma's Jars Budgeting and passionate budget coach. Welcome to another Q&A video. In this video I'm answering a question from Joan, and Joan is asking about the effectiveness of her structure, her bank account structure, or the way that she's trying to pay down her home loan. Now, at the moment, Joan's got a situation where all of her income is actually going directly into her mortgage, and from her mortgage she is then paying her expenses. Now, this was a really popular way to manage your finances about 5 to 10 years ago, or it started to become popular about 5 to 10 years ago, and the banks sold this as a product for accelerating your home loan, for getting rid of it faster. Now, they were very, very effective in selling this system of managing money because, in theory, it actually works. The idea is that all your income, let's just say we've got $5,000, goes into your mortgage. Okay, so you're then only paying interest on $95,000 while that money actually sits there. And theoretically, yes, this should pay down your mortgage a lot faster because of the interest you're saving while your money's sitting there. The problem is that most people don't really have control over their expenses. So what's actually happening is, yes, $5,000 might go in, but we've got $5,000 going out too, and therefore we've not actually made any progress. And what actually happens is that it's not just the $5,000 that you're losing. Typically, you're also using the principal that should be paying down your loan as well, which means that your mortgage isn't going anywhere. And that can be really frustrating. The other thing that makes this very, very hard to deal with is that there's no way of knowing whether you're going forwards or going backwards with this system. Now, you might say, well, hang on, yes, there is. If I put money in and I put money out, it should show me at the end of next month, well, how much have I actually got left, and is it lower than it was last month? But the problem is that doesn't factor in that some months you don't have many expenses, and therefore it looks like you've made progress, and then other months, all of a sudden you have a big bill on the car maintenance, you've got the car registration, the car insurance, and the rates are all due in the same month, and as a result, you suddenly go back in the opposite direction. So on a month-to-month basis, managing your money like this is very hard to know or to quantify whether you're moving forward or whether you're moving backwards. Now, at the end of the year, so after 12 months, one cycle of all your bills and expenses, yes, possibly you can actually monitor it, but that's a long time to wait to be getting feedback as to how you're progressing. So typically, this system does not work, and the banks know that. The banks have sold it on the theoretical possibilities, but they know that human nature is that unless we have a system for managing our money, for keeping on track of our expenses, that typically we will spend at least as much as we put in, and perhaps the principal that should be coming off the loan as well, which means that we're not making any progress, and they keep us in a loan for longer. I have only seen this work for one person, and this guy was an absolute maniac with his money. He was at the extreme end of, I've got a mortgage and I'm going to get rid of this in 10 years and I'm going to sacrifice my life to make this happen. Now, for most of us, that's not reality. Yes, we want to pay down our mortgage faster, but we don't want to sacrifice that 10 years of life in the process. So this system doesn't really work. Now, if you've got a budget and you know consistently that you are spending less than you earn and you're planning for your future expenses, then yes, it should work. But again, you still don't have that regular check that tells you exactly how you're tracking because your account doesn't give you that feedback. At Grandma's Jars, we have a very specific bank account structure, which I'll put a link to in the notes below. We have a very specific bank account structure that we recommend that every person take up. And I can guarantee that this system works. Not only does it work and help you stay on top of your finances, but it allows you to see at the end of every single month, well, have I gone forwards or have I gone backwards this month? And by how much have I gone forwards or backwards? So you can see your progress on a month-to-month basis, which is very motivating and really helps you stay on top of things. So, putting all of your income into your loan and paying your expenses from your loan really doesn't work. So the banks might show you that it does, they might show you the sums. Theoretically, yes, it works, but in reality, it's a pretty tough gig. So please, can I encourage you, subscribe to our Grandma's Jars YouTube channel. We've been doing this for 15 years. We know what works and we know what doesn't. So subscribe and you'll get all sorts of videos that will help you manage your money.